Alright, got the OBS studio up, so we should be live now on YouTube. So I'll get the recorder, so then we can record the session and then we can get this going. Alright. And we're going to get this going. Also, if you have any questions before I start, throw them in the comment section below. I will answer them at the end of the video. But I'm going to go through some of the news articles as well as the TA and price action before I get to the Q&A. But I will be going over Q&A at the end of the video, just letting everyone know. Hey traders, welcome to a global macro update. Hopefully you're having a good Monday. We're going to start off this video looking at the economic calendar. There's not a whole lot for this week. We got some PMI numbers earlier on Tuesday. We did get some existing home sales today, which was lower than the forecasted 4.12 million. It was 3.91. Some interesting stuff for the interest rates for New Zealand on Tuesday. And then Thursday is going to be the big one for the GDP numbers for America for the first quarter. They are forecasting that it's going to be the same as the previous quarter of negative 5%. And we can see that right here. This is the potential forecasted, which is going to be the same as the previous time. And this was 2009, the financial crisis. And we can see that it was worse than the 5% that we are forecasting to see for this next upcoming GDP announcement. So we'll see how that goes. Also, I just wanted to read this. I was reading some stuff on Kitco, and I just thought this was a great paragraph. And it's by Michael Pento. And it's talking about central banks and the situation that they're currently in, and they basically only have two options. So I'll read the paragraph first, and then we'll discuss a little bit, and then we'll continue on with the video. Therefore, in the not too distant future, central banks may have to decide whether to let inflation run wild on the back of absolutely unprecedented monetary and fiscal madness, which is bankrupt governments, unlimited QE, permanent ZIRP, which is zero interest rate policy, which will wipe out our starving standard of living, or progressively jack up interest rates and cut spending in dramatic fashion, which will obliterate the asset bubbles and the economy in the process. We saw this in the 70s where they had to increase the interest rates substantially. They do talk about that within this article, which is a pretty interesting one. You can find it just by Googling it, but then we can see the effective federal funds rate, which is the interest rate, absolutely skyrocketed. It went to double digits back in the, looks like mid-70s, and then we were at the peak of over 17.5% at the later half of the 1980s, it looks like there. So pretty unbelievable stuff. Or they just don't raise interest rates and let inflation take a toll and basically destroy the wealth of everyone within their economy. So it's a very difficult situation, obviously, but they put themselves in this really hard predicament. So we'll see how it goes, and we're going to be aware of the different opportunities that lie with each outcome or each potential pathway that the central banks really do end up picking. On to more of a crypto-related topic. This is still talking about global macro because this is extremely important. Understanding what company or what country will first have a central backed digital currency will be, in my opinion, very pivotal, because it's a big move. It is definitely a big move, and we see China taking the lead. Yes, America has been slowly discussing it, but China has been really pushing forward. So we'll look at this article here. A former senior official of the People's Bank of China said that the country has completed a back-end architecture development of its digital currency. With so many cryptocurrencies already in existence and in development, China is seeking to create payment infrastructure in which these currencies can coexist with sovereign digital currencies. According to Wang, this epidemic has increased competition in the digital currency space, with more tech giants and governments taking interest in creating a better digital payment infrastructure. He specifically noted the development of Libra, through which Facebook is trying social media-based digital wallets. This last paragraph I thought was Pretty interesting. While everyone is still unsure of when China plans to officially release its digital currency, Ledger's Vault head Asia Pacific region Glenn Wu told Cointelegraph that the digital yuan will likely be the first state-backed virtual currency to launch worldwide. Obviously, this is an opinion. It's not a guaranteed fact until that actually happens, but to make that claim, he must have some level of confidence, obviously, and understanding that China is really progressive and aggressive when trying to create this new monetary policy of a central banked digital currency. Gonna get a little bit of water and then we'll continue on for the last little discussion about the increase in COVID cases due to the opening of economies. So we can see in this article title, Coronavirus Case Surge in US and Brazil, as Brazil and Germany reports more outbreaks, but markets don't seem worried. So there are more cases increasing because countries are opening up economies, letting barbers, basically the restaurants, things that were closed open, and this is causing more COVID cases, which obviously makes sense. But what I'm a little bit surprised about is we're actually seeing quite a bit of bullish momentum in the overall markets. I definitely thought that this would somewhat impact the economy in some case, but it definitely seems like the bulls are really not minding this increase in COVID cases. Surprisingly, even though there is social unrest, but when we do look into the charts, we'll discuss what needs to happen in order for us to have more validation of an actual breakout to the upside. We do have some key resistances that we do need to break, but we'll get into that when we get right into the chart. So first thing we want to look at is going to be the S&P. I think that's a really good way to just generally know if we're potentially on a risk-off, risk-on sentiment, as well as it's a good way to understand where global investors are kind of at. In terms of the US, but also global, because a lot of people invest in the US who are not living in the United States. So let's go back to the daily chart and then zoom in from there. So we know that we've made a lower high, but we are holding a previous resistance that we can see on a smaller time frame. So we have a previous resistance which got broken by this extremely bullish candle with a long wick to the upside with increasing buy pressure, pushing the price up. You see small amounts of sell pressure compared to the buy pressure on the upside, and you see strong pushes. You do see quite a bit of wicks to the upside as the price was falling, but at the end of the day, the buyers were able to hold this strong level of support. And we can see when we go back to the previous time frames, it was a previous support before we had a huge push to the upside. And then the main zone that we do want to be looking at is going to be that 2970 zone before I really look to have any major exposure in the S&P, at least to the downside. So we're now going to get into the 6-hour time frame and discuss what we currently see. Let's go back to the daily and just discuss this expansion. We got an expansion in volatility. We are seeing increasing volatility where you see tight ranges, and as the expansion gets wider and progressively larger, you're seeing larger swings of series of higher highs and higher lows, but it does look like we're increasing in volatility. As we get deeper into this, could have an actual move to the upside with the blow off top if this continues, but obviously, this trend is still moving pretty strong. I don't want to go in front of a steamroller in my personal belief in terms of looking for shorts just yet because we don't have confirmation. The confirmation, for me at least, is the 2960-ish range. We can see right here, that would be the horizontal zone the price would need to pass in order for me to really look at some opportunities for some short exposure for swing trades. But in the short term, we do have a bit of a descending channel. You can just go like this and it's a descending channel, but it's a little bit of an expanding price action pattern. But the main zone that I do want to see break potentially for a bullish breakout is this descending resistance. You see that there is a type A, which is a candle closure a candle wick touching that zone, and then this is a type B, which is a candle closure touching that zone, and this is a type B, which is an anchor point. So you have 3 valid zones where this has rejected, and then we're coming on to the 4th zone. We did see the price hold the previous resistance. We can see very well and clearly on the 1-hour chart. Strong level of resistance indicated on the chart where you see an ascending triangle right here. Break to the upside, you can see that that was the new resistance. Pushed above it, and we held that for a new level of support multiple times. So right now, in my view, we are just in a consolidation sideways. Let's get our snip right here, where we do see that there is a series of lower highs right here. This is the first high, and then lower high, and then we just draw in a trend line. We're testing this next high right here, and then the run up to it has been pretty aggressive, where we tested this previous support right here, which was also a resistance indicated right there, and we actually held it. Even though the price did push down initially, the buyers were able to push the price right back up, because we can see that the actual body of the candle closed within the support zone, this descending support zone, and then just the wick protruded below that demand area. Once that candle closed, we got a strong push to the upside with a series of higher lows and higher highs, and progressively higher highs, which showed me that there's buyers and bids who are pushing the price back up, really wanting to get into the market. But I don't want to call it extremely bullish or anything just yet until we see a break of this zone. So right now, I'm currently seeing this as a potential either market accumulation phase or distribution phase. This is currently a descending channel that I currently see, and then this is the mid-range zone that I see. And if we break to the upside, we'd be looking for a retest of this zone like so, and then if it breaks to the downside, we'd be looking for an initial break in this ascending zone, which we can see a little bit more clear on the 1-hour chart, because right now we do have a squeeze between the resistance zone at the top connecting the higher or the lower highs. Let's just get the mouse again, and then we're looking to see either this zone break right here or this zone break right here, because we do see an anchor point 1, 2. With the anchor point is 3 valid rejections, which in my opinion and in my strategy is enough to consider it a valid trend line to use. So right now we're in a squeeze. We're looking to see if it's going to break to the upside or to the downside, and that will initiate the next potential trade that we're going to be looking into. But right now, we're just squeezing, and it does look like we are making a strong push to the upside. That's why we're seeing BTC move to the upside, in my opinion, as well. Overall, it does look slightly more bullish, but just in terms of the S&P, I do not think I want to get too bullish until we break that zone. But in terms of the smaller term price action, obviously we're making stronger moves to the upside. This candle really signifies lots of buyers coming into the market after we broke our nice ascending triangle right there. So we're making a bullish push. This area right here would be the TP that you're looking for, which would be in confluence within the series of lower highs. So this is our next, you could say, battle zone or zone of sensitivity, where there is going to be some level of buy pressure and sell pressure interacting together. That's going to make the price either move to the upside or to the downside. So that's going to be the next big play for us on the S&P, which will then drive the overall sentiment within the market. Next thing we're going to quickly look at is the Russell 2000. It still has not broken the right shoulder potential. We actually got a really nice wick to validate this resistance zone, which was, we can see a previous resistance zone, and this is the head. So as long as it sits below that 1450 range, this potential head and shoulders is still in play. And then we do see the series of higher lows connected by this ascending trend line. So then we're going to get an ascending triangle pattern here forming, and if we do break to the downside, breaking the support, we're looking for a nice retest. Let's just draw this just so we know as an example of what we're looking for. We're looking for pretty specific situations where we want to see initially this ascending zone break to the downside, where you want to see it consolidate even further, and this low will ideally be a lower low than the low that was held on this support zone. So that will break the market structure, and then you're looking for validations of that support, new level of resistance. So you're looking for the completion because the market moves in waves. You're looking for not the entry at the bottom of the wave. You're looking for the entry before the next impulse push to the downside. And that is what you're looking for. Push to the downside, pull back, and then once you see wicks, once you see bearish engulfing candles, once you see indications there is sell pressure, injections of sellers coming into the market in our zone of sensitivity, that is where we want to be looking for potential opportunities. Because if we are going to see any sell pressure come in to the market in the S&P, the Russell 2000 will definitely see a lot more of a drop compared to the S&P, because this is a small cap, more speculative investment instrument, whatever you want to call it. So that's going to be my play on it. I'm going to stick and stay patient with it. No real action taken just yet on it. NASDAQ has broken yesterday's high. It closed pretty bearish yesterday, but we got the bulls to basically close it right at the high of the day, which is extremely bullish. It has yet to break the previous high on June 10th, but that candle closure for me definitely shows that we could see some more buy pressure coming into the market. We can see right here, previous candles closing very high to the daily high is extremely bullish. If we see a lot of retracement, that means that sellers were able to hammer back the price near to the open. We can see right here, yes, the day was bullish the next day, but on average, you're not wanting to see long wicks to the upside. You're wanting to see the candle close near the high or at the high in order for us to validate a potential next bullish day on the daily or 12 hours. So overall, NASDAQ looks pretty bullish. Quick look at the VIX. It is slowly dropping. We do have a nice little support here at around 31. This is just for the S&P 500. You can actually use VIX like as an instrument using VIXI or TVIX, but it is pretty volatile, just saying. So we do have a resistance here, which is going to be our current level of support at around $31. If we do fall below that zone, definitely going to be a risk on sentiment. 9 times 9.995 were very high amounts at the time, if not always. When the volatility is decreasing, it's a risk on sentiment, and when volatility is increasing, it's a risk off sentiment. Usually people flee from stocks. Crypto is, in my opinion, still a risk on asset. It is not correlated with things like the US dollar, treasuries, which are bonds, or gold yet. I do think that cryptocurrencies, BTC, will slowly come into play where it's going to be a safe haven, but as of right now, it is still a speculative investment that has higher positive correlations with traditional indexes like Dow Jones, Russell 2000, and the S&P. So it's a risk on asset in my point of view. All right, so that's going to be the volatility index. We got NASDAQ. So we covered the U.S. equities. So we're going to quickly cover the global equities here. We got the FTSE 100, which is the UK. I'm going to get a quick bit of water, and then let's continue on. All right, so this is the first index that we're going to be looking at. This is the FTSE 100, which is UK's index. We're creating an ascending channel here. We got a nice series of higher lows and higher highs. We're about at the midway point. We haven't been extremely well. We did have a red day today, but overall we're making higher highs and higher lows. The main zone that, in my opinion, is a key area of significance is around, let's say, 6,100 for the UKX, which is the index of the FTSE 100. And as of right now, it does look like we are forming a bit of a lower high, but obviously this could be a consolidation zone. We can zoom in and see that we are holding the previous resistance. We can see right here as a new level of support. So in terms of the market structure, when you actually get granular in the detail of the time frames, we can see that it is still moving in a upward trajectory. forming higher highs and higher lows. We even, when we're looking at the 1 hour time frame, see that we have been making a higher high previous to that high, and we've been able to hold some higher lows. So overall, it does look pretty bullish. Yes, it's a little bit of a consolidation, but buyers are definitely beating the sellers in this current market. So now let's go to a different index. We're now going to go to the Japanese stock market, the Nikkei 225, and it gapped up. It's actually currently running right now. I'm in the PST, so Pacific Standard Time, on the West Coast, but it does look like the Japanese stock market is currently running, and it did gap up, so it's looking pretty bullish over on the East Coast, or Australia, Japanese time, somewhere around there, wherever you are living. So it's looking pretty bullish. A little bit surprising because we did have more COVID cases over the weekend, but markets generally seem unfazed. It looks like global investors are still having a pretty high tolerance to risk. They don't mind speculative investments to gain a higher ROI and not running to investments and trading things like low yielding bonds and gold that doesn't really give you any sort of dividend or any sort of cash flow, but is a good way of storing value over a long period of time. We're not really seeing that just yet. Australian stock market did gap up, but holding resistance, consolidating, not really doing a whole lot. And then the Canadian stock market, the TSX, has just been consolidating within a range, not really been doing a whole lot. So that's going to be the overall structure in terms of the global equities. And we are going to now go to a little bit of oil, both Brent and WTI, which is Western Texas Intermediate. And then we're also going to be looking at some bonds, just some U.S. bonds, the 10-year and 30-year yields. But first, we're going to discuss the WTI crude oil. We did make a new high. So let's go to the daily chart. We actually made an unbelievable recovery here from that huge event that occurred where futures price for gold went to negative, as well as some actual physical deliveries and stuff actually went negative, which is unbelievable. But it's recovered. We're above $40 now, and we broke above the previous high. So the double top is now invalid. We're making strong, higher lows and higher highs, and it looks really bullish, pretty unbelievable. I definitely think that it would not rebound this quickly, but we do see that despite the quick reopening that some people might have hoped, and with that would be an increase in transportation, production, increase in oil consumption. You're not really seeing that to the speed in which the buyers and bulls would like, I'm sure. You're still seeing the price and the demand for oil go up pretty aggressively to the upside. So in terms of AUD, New Zealand, CAD, that is pretty bullish. Usually the price of those currencies, Australian dollar, New Zealand dollar, Canadian dollar, is positively correlated to crude oil. So we can see in the FX realm, those currencies are doing pretty damn well. Canadian dollar, not so much, but Aussie and the Kiwi have been doing extremely well. And we can see that it made a new high. I was looking at this as a potential ascending triangle here, and if it does pull back and we get a wick on the daily, that could still be in play. But if it does make a higher high, that's not the worst case in the world because we're still making higher highs, although that would be a marginally higher high, which isn't great to see. We could be forming an ascending wedge or something along the lines of that, but we'll take it day by day. And as of right now, we just made a pretty bullish move, breaking the previous high, and Brent has a very similar situation. Did not break the high yet, but obviously they're pretty damn correlated, so that's going to be the discussion for both of them. We do see the bonds now talking about the US 10-year and 30-year yields. So basically, when you see yields go down, people are buying bonds. It takes less yield in order to incentivize investors to purchase bonds to get a low yield of what is currently 0.7% for 10 years, and for 30 years 1.47%. And if bond yields are going up, it is requiring more yield in order to incentivize investors to invest. So that's kind of the balance side to do it. And we do see it is holding that zone. If we do get a huge move to the downside, it means that there's going to be a lot of people running into bonds. So you don't want to see this confluence zone break if you are a bull. If you see this plummet to the downside, that means that people are going into bonds, probably out of equities, out of risk on instruments and assets, which if you are a bull would not be a positive thing. So as of right now, we're holding, we're consolidating. Not a whole lot has happened within the bond market in terms of the yields, but it's always good to understand what they are doing. All right, now we're going to get into gold and silver. So let's go to the daily chart. We did say how we really would like a daily candle to close above this 1745 level, which we did see a huge rejection on, and it was a nice potential for either in my opinion, a volume distribution phase or a volume accumulation phase. And there was a little bit of worry when we were getting deeper into the support zone. That it was a pretty risk-on sentiment at that time, and it still is. Doesn't mean that equities and gold can't rise at the same time. They totally can. But in terms of a risk-on, risk-off sentiment, usually if there's a huge bull run in equities, people aren't going to be running into gold as well. If you look at the dot-com boom, gold was at an all-time low. 2008 happened. Gold did increase while stocks were increasing at the later point in time, but at the later half of that, gold started actually really taking a massive bearish turn to the downside back in 2011, and that's when the stock market really started to boom from 2011, 2012 until around, well, I guess it's still booming now if you look at the NASDAQ, but usually they're negatively correlated, so either people are going into gold or people are going into equities. So that's just the way I view it. And it does look like we are getting a little bit of a bump from gold, but I'd like to see the stock market not do so well before I get extremely bullish on gold. They can both come together at the same time to an upward momentum. That's totally a plausible situation. And this candle closure on a larger time frame, I think even on a 12-hour I held right there. I don't love it, but if we are looking at the structure on the run-up to the break of this, it's very different than what we saw in the previous attempt to break this 1755-ish zone. So in the previous run-up, this was the zone right there. We did break, but we failed to hit that target, which was around 1800. That's my target for the bullish move that could come for gold, and then we failed to make that target. And then once we started seeing this, it was not looking great. Our main support was around 1680, like we can see at this zone here. It held, which was great, and then we started seeing some higher lows come in, which was a pretty good sign. I enjoyed to see that. I was a little bit hesitant when this broke within this range because it was still not really seeing the bids to push the price up. Really, it was consolidating, and until we broke this zone right here, I was a little bit hesitant on gold. But at this point right now, it does look like it's consolidating, and overall we're making higher lows. We can zoom in on a smaller time frame, and it does look like it is creating a potential ascending triangle. I think if it does hold this higher low and create an ascending triangle, break to the upside on the 1 hour time frame, it's really, really well respected. Let's just make this actual line like so. We can see that a little bit more clear. If it's able to hold that higher low from this low and then break to the upside, retest that previous resistance as a new level of support, I think that would be a phenomenal opportunity for gold for a long, with a target around 1790 to 1800, right around there. So you're looking at some great risk reward parameters, and that would be an opportunity, I think, even if the market does go up or down, unless there's a major liquidation event. I think that gold overall is pretty uncorrelated with the market as of right now. The market, especially equities, is, in my opinion, in another world. Not really following economic data that's coming out. Initial job loss claims were absolutely terrible, and the market was exploding to the upside. It just did not make sense for a lot of the time, but really made me realize that the equities market is not a representation of the true economy at all. So that is the analysis on gold. I think that price action pattern will be very valid and will be pretty awesome if we do get that higher low to hold and we break that resistance, retest it. Once that retest is in, I think that's going to be the area to potentially pull the trigger. Silver also is looking a little bit more bullish here. We did get a break of this resistance, and then we are holding the previous resistance as a new level of support in confluence with the descending resistance, which is now going to be a new level of support as well. So overall, we do have a lot of demand right around here, which it does look like we are holding a decent bearish candle, a pretty aggressive bearish engulfing candle, which was on June 22nd on the 2-hour, is looking like it is holding. And overall, we will need to see gold continue to go up, making higher highs and higher lows if we do want to see silver move up as well. But overall, it does look like this squeeze of this series of higher lows and lower highs is coming to an end, where the buyers are winning the battle and are able to push the price up. And then if we're just looking at potential next areas of significance, we would be looking at some potential geometry in line with some previous levels of either resistance and support. So I think 18.5 is going to be a pretty important zone, 18.5 or 18.6, and we can see the next area is going to be around $19 for the next main zone as a psychological level, as well as a pretty important zone within the price action. But we can look at the daily chart if we really want to get nitty gritty, but I'm just going to give you my analysis on the next. I'm going to do another global macro update probably on Wednesday or Thursday, so obviously we don't need to be looking at the weekly and daily every single day. But that's going to be my analysis of silver. It does look pretty good. As long as it's holding that level of support, it does look pretty bullish. Although, like I said before, gold does need to hold that ascending trend line and that ascending triangle in order for silver to actually go up. But silver does look pretty good, and it does look like it's in a potential breakout zone where it's held that previous resistance for a new level of support. In terms of the gold and silver ratio, if this lower high does hold, and it does look like it is because we do see some wicks to the upside, it does look like there is a lot of wicks to the downside as well. But if this lower high does hold and we get another move to the downside, I think that the overall metals market will see a bump up. It's just silver will just see more appreciation compared to gold. Doesn't mean that gold won't be a good trade. It could be a great trade. It just means that silver will probably be moving and gaining more in the current price. Basically, I'm gonna need a little bit of water. My mouth is super dry. All right, so let's quickly go to the comments. It's going to go and get the comments on YouTube and see if there anything is. And then also going to be looking at the TikTok comments. So I'll be going over those quickly, and then I will continue on with the analysis, looking at some stuff in the realm of crypto. So let's just quickly go here. With what cryptocurrency? So we're mainly looking at BTC right now. We'll look at the total too, which is the altcoin market cap, which is a good representation of the overall altcoin market because it is excluding Bitcoin. So that's mainly what we're going to be going over in terms of the alts. Hi Jordan. What's up? PayPal going into crypto. Let's go. Yeah, that's awesome. I'm extremely hyped about that. Nerman. Hi. All right, yeah. So I definitely think that PayPal going into crypto is an extremely positive thing for sure. So with that said, let's now actually talk about BTC. It does look like it's really seeing a huge bullish push, or not huge, but a significant bullish push, because we do see significant bullish volume and increasing bullish volume coming into the market with our average Bitcoin volume indicator. And if we just go on to a larger time frame, because we do like to see charts on large time frames and then zoom in, this is the 6-hour chart. This is that descending wedge that broke out to the upside, and it looks like we could get a nice pullback on this previous resistance, which is going to be a new level of support. Would not be a bad situation to be looking for a potential short-term entry if you are looking for a day trade, but you got some hefty resistance here at the 9,900 zone if it does even reach the 1.2K zone. I think if you're not in it now, it might be a little late if you're entering FOMOing here. If you get and wait for the retest and you're able to have a pretty tight stop loss, you could be looking at it as a decent trade if you are a little bit leveraged up. Obviously be responsible with it, but in terms of larger swing trades, I think this is definitely not going to be a long that is going to really extend, because we've seen how aggressive the sellers have been on the $9,900 zone up to the 10K or 10.2-ish K zone. Those are going to be major supply zones that we've seen in the overall price, and we do see that there's a squeeze from this a series of higher lows and this descending wedge, which is then breaking to the upside. It is in the same direction as this ascending trend line, but overall this major supply zone is holding the price, creating either a horizontal zone or a descending zone, but I don't think we're going to get really a higher high within this consolidation. I think the still higher probability situation is for us to hit this around 99 to, let's say, 10K zone, and then have quite a bit of resistance, and then potentially fall to the downside, in my personal belief. And then we'll even go to the daily. And I could be very well wrong. This could be the potential breakout that we're looking for. And if I am proven wrong, and if it does break and hold this zone, I'm very all right to call myself wrong and for me to basically change my bias. But as of right now, the potential for what looks like a potential head and shoulders is still in play at the $9,900 zone. So there's a positive correlation within traditional markets and BTC. So usually what the equities market does, mainly the S&P, will be somewhat reflective of what Bitcoin will be doing. We saw a pretty big pop recently within the equities market. Bitcoin made a strong push to the upside as well. So that's why we try to understand what's happening within the equities market as well as the cryptocurrency market, because there are correlations and relationships that assets that don't seem too correlated have with each other. So that's going to be the larger time frame on BTC, and then the smaller time frame, I think the path of least resistance, just the initial move that it is currently carrying in its momentum, will continue around, like I said, the $9,900 zone. So it looks pretty bullish as of now until we get to that zone, and that's our next major battle zone that we will need to pass if the bulls do want to continue the move to the upside. Quick look at the total 2, which is the altcoin market cap. We saw that overall altcoins did move to the upside, gaining market cap, and we do have a key level of resistance at around 95 billion in the market cap. And if we go back to the 2-day, we can see that we are forming a pretty good squeeze. So even on just looking at the altcoin market, we can see that we're near a high, consolidating, made a marginally higher high, holding a support which does look well respected. But if this does break to the downside, breaking the current support that we see within the total 2, that definitely looks like a potential head and shoulders, which we saw right here on a smaller time frame. And then we'd be looking to see if we can short some alts if this does reverse. If it does hold this 86 billion level for support, and then it breaks the resistance that we can see right here, and it continues chugging towards the upside, that definitely could be an indication that my thesis is wrong. I do need to be recalculating my analysis, and we got to be looking more bullish in BTC. But as of right now, in the short term, yes, it does look bullish, but that 10K, 9.9K zone is got to be a very important level to understand where supply is going to be located for anyone in the crypto sector. So let's get the 6-hour chart here. And then we're now going to quickly, I believe, look at the comments and see what else we have. And then I think that's going to be it for the global macro update, along with the crypto market update. It's a general understanding of risk off, risk on sentiment when we're looking at the equities market, when we're looking at bonds, oil, the volatility index. All that stuff is useful in order to understand if we are in a risk on or risk off sentiment. And with that analysis and knowledge, we can then make our trade ideas based off of our global investors having a higher risk appetite or a lower risk appetite compared to historic times. And that's what we're trying to understand basically with that. So thank you very much for watching. We appreciate it. I will be closing the recording, but I will continue the lives for YouTube as well as TikTok, so then I can answer any questions as well. So thank you very much for watching. Really appreciate it. If you have any questions, drop them in the comment section below, and we will be answering all questions. So until next time, have a good one, and happy trading for the rest of this trading week. All right, so that is done. Let's look at some questions here. How about NCHL? So NCHL. I don't know what that is. LH, Norwegian Cruise Lines. I have no idea, man. I think these really, really battered down stocks that a lot of people are getting into because they're, quote, too low. It's pretty risky. If the second wave hits, they're definitely going to tumble more. And basically, they're either getting bailed out or just adding on to the current debt I'm sure they already have on their books. So I don't really have much to say on that. I'm not really looking at the equities market, so I don't really have a whole lot of information that you couldn't find readily available. Bitcoin starting to look bullish from Miles. Yeah, I definitely agree with that. We got a nice descending wedge breakout here. I'm a little bit wary of the 9.9 to 10K range, that big red range we can see right there. We got rejected multiple times from that zone, so I want to be pretty careful. And this is also not just looking at the 6-hour daily chart, but this is also a key area when we are looking at the weekly chart, because this zone is in confluence with, when we're looking at the weekly, the series of lower highs that we're seeing in order to create our symmetrical triangle bullish continuation pattern on the macro scale. So it is a pretty key area for the sellers to be located around the 9.910K range. We have to keep that in mind, but overall, yeah, I completely agree. It does look more bullish, but like, for example, I wouldn't be putting my entire trading portfolio in BTC because I think that it's going to appreciate exponentially for the next year like we saw at the start of 2017. I don't think that we are at that point yet in order to confirm that decision and say, yes, this is the right choice. That's just me. Everyone is different, but I'm yet to make that choice and say that this is the start of our epic bull run that everyone is anticipating. To give you an idea of where we currently are. I'm extremely bullish on crypto as a whole, on blockchain as a disruptive technology that will be innovating and disrupting many sectors, but I just think it's a little bit too early. I think there needs to be a little bit more carnage, sadly, before the real development and implementation of blockchain will appear. Personal opinion. You're a champion. Thank you for going live. You've been very helpful. Yeah, I appreciate that very much. That is the goal of our lives, is to provide mostly our opinion. I want to remind everyone that we are not financial advisors. We do not give financial advice. I can't tell you to buy Bitcoin and give a certain percentage of your portfolio in BTC or cryptocurrencies because I'm not a financial advisor. You got to do your own due diligence, your own homework, and understand why you think BTC or Ethereum would be a tremendous investment for the long term. I understand why I think it's a great investment, and I do think that BTC and Ethereum are great investments if you're going to hold it for the long term. But that's just my personal opinion. In terms of trading, in terms of swing trades, like I said before, it's a little bit too early to tell. If we are looking at the volume, also noted the volume, we do have our own volume indicator, Performante's average Bitcoin volume indicator. We can see on the TikTok. You can get it for absolutely free on the TradingView scripts page on Performante Trading, which is the TradingView account that we use in order to provide the script, in order to get the average volume of BTC when you average out all the major exchanges that people use, Binance, BitMEX, Bybit, Coinbase, like literally every single major exchange, Kraken. So anyways, yeah, so great overall indicator to understand, try to understand average volume. And we can see volumes plummeting here quite quickly for the buyers, yes, for the sellers as well, but overall there's a contraction in volume. So there's going to be a pretty aggressive move. We're getting a very sharp contraction in volume, which usually is a initiation for an expansion in volume and expansion in volatility and price action. So we'll see how it goes. Right now it does look pretty bullish. We could get a nice little retest in 95.70-ish, which is a previous key level of resistance. And if we're able to hold that zone, the next major impulse push to the upside could reach 99. I wouldn't be too surprised. And then we'll see how it goes from there. I think this next year will fake out a lot of peeps. From XPod, which asset are you talking about? Are you talking about BTC? Maybe. If you're talking about BTC, it depends where it goes, right? I think it's definitely, as of right now, been a lot longer than people anticipated for the bull run, because they called it when it went from 3.2K to, let's say, 14K, when we broke that out of that 4.2K consolidation zone. A lot of people thought we were going to hit all-time highs and go beyond. We didn't do it. When we broke out of that reverse head and shoulders, people thought it was going to go to all-time highs, didn't do it. And this is the third attempt. We'll see how it goes, right? We don't exactly know if we're going to do it or if we're going to consolidate, fail to break the 5K, which is the peak of the resistance zone. If it breaks that zone, it's a breakout. I'm definitely more bullish. But if it fails and doesn't break out of that zone, I think it could go deeper. And this large macro triangle that we can see on the weekly chart has a lot of time to go before it hits the apex. So just looking at it from a technical standpoint, we have, if it does gain some bearish momentum, a possibility of a long, drawn-out wait that most people are not expecting. If it does, especially the key zone is 8,500. If it breaks that zone, I am extremely short bias, and I think that we will have a sell-off, and you're going to be looking for continuation patterns to the downside, in my personal belief. Ideally, it would be nice if we do hold that series of higher lows seen on the weekly chart. But overall, I do think that the opportunity where you get a continuation pattern below the $8,500 zone to the point where you're going to get held by the series of higher lows on the weekly is a extremely probable situation that would be a solid trade if you're able to get a good structure on a smaller time frame. BTC in general. Is bull run from the 85% retracement unlike any other? Is bull run from the 85% retracement from the all-time high? So you're talking about when we hit around $3,200. I would say we are not in a bull run yet. We're in a consolidation and a large macro pattern, which is a continuation pattern that has yet to break out. So we're in a pretty pivotal area right now for BTC, in my personal opinion, because we are squeezing between a very important area of both resistance and support. Resistance being initially the 9.9 to 10K zone, and then if it gets beyond that, if it breaks beyond 10.5, I'm going to call it a breakout for sure. If it holds beyond that, it's going to be a breakout, in my view. But if it doesn't break and hold beyond that zone, and if we get a tumble below especially 8,500, that's going to be the red flag for me to be looking at possible short opportunities, because I think a sell-off will be coming. I don't think it'll be as aggressive as we saw in that 50% liquidation event where in a single day BTC fell 50%. I don't think we're going to get that aggressive of a move to the downside, but in terms of the overall direction, I think we're going to get a pretty high probability situation to go further down if we break 85. So that's going to be my overall analysis on BTC. So thank you very much for watching. I really appreciate it. If you have any questions, you can drop them in the question section, comment section. Got another question from YouTube. Do you think the quarterly reports by the end of the month can be decisive to the market? Quarterly reports by the end of the month, do you think could be decisive to the market? Not sure which quarterly reports. In terms of overall, yeah, definitely that does play a pretty key role. If you have earnings season, if you have reporting season, every 3 months, that's definitely going to play a role in the catalysts for large corporations, and those large corporations obviously make up the indexes, so that is going to be playing a pretty key role. But we'll see how it goes. To be completely honest with you, do not follow the reports of the equities market. I follow the economic calendar pretty extensively when I'm doing my kind of global macro analysis, looking at the big things that are coming out, but that's just me. So hopefully that answers your question. All right, so I don't... holy shit, S&P absolutely plummeted. Look at this. Wow. Let's see this. Holy shit. Wow. Big move to the downside. We see, let's look at the VIX here. VIX is closed, so it'll be a pretty big gap up tomorrow for sure. And I'm sure there's going to be a lot of things that are gapping to the downside when we open today. That was a huge move down after hours. Wow. 1.2%. And if it holds that support possibility, but that's a squeeze that if it breaks to the downside, that's going to be a pretty big move. Wow. Yeah, that's an aggressive move, let's just say. Wow. All right, so let's look at some... oops, I do not want to do that. Let's just look at some opportunities that I'm looking at in the realm of FX. So GBP has been doing really poorly, generally, compared to basically any other currency, any other major currency. It's weird because the euro, when they said they're going to print more money to stimulate the economy, to try to create more demand among consumers, to try to increase demand in general cost or general goods and services, so raise CPI levels, the euro went up in value. It was stronger. So basically they printed money and the euro went up. It was stronger. But then when the UK said that they printed money, GBP went down and lost value and lost strength. So it's a weird situation where you got to look at the price action, not so much the actual numbers, especially now. Wow, we are getting an absolute plummet here. Look at this. That's not what we should be looking at. Let's just go here. Holy shit. So let's look at our risk off situation. USD and JPY both getting a lot of bids, so you're not seeing one strengthen over another. So the potential I'm looking for is there's a larger descending wedge, and you're at the high of the wedge, and you got a nice little ascending wedge within the descending wedge. And then the high probable situation that I would be looking for is a break of the support into a deeper lower low if we are looking for a risk off trade opportunity in the realm of FX, basically. Let's see what crypto's doing. Crypto's probably getting creamed pretty good. Let's see where its bull run is, or bullish push. Not that bad. Definitely seeing a little bit of hesitation from the buyers. Don't see a lot of sellers coming in just yet, so it's just a hesitation. No buyers are coming in, but there's no one actually selling just yet. So we're just in a pausing phase. If we go on to a larger time frame, I'm sure it's a bit of a doji candle of some sort. This is the 6-hour time frame. We got around 4.5 hours until it closes. We can quickly jump to the 4-hour. So even if we close at around 95.82, I wouldn't be extremely bearish just yet. That could just be a pullback to validate the previous resistance as a new level of support, except the S&P is plummeting really, really far. Holy shit, wow. All right. That changes it up a bit. That gives us a little bit of new information. I kind of like the... Gold is doing quite a bit right now. We can see gold held the previous lows. Let's go to the 1-hour time frame. If this is the low, we can just work with that. So then we'll get our structure right here. So we're getting a pretty negative correlation right now between the S&P and gold. The S&P is dropping pretty aggressively right now, and then we're actually getting gold to see a huge bid. So lots of buyers coming into gold on the 1-hour time frame with around 36 minutes till the 1-hour closure. We don't see a lot of actual transactional volume coming in. It's a pretty low volume time right now. We are going to have the Asian session open up, or is it? I believe it's already open actually. Let me just check right now. I think it is open right now. It just started because at 5 o'clock it opened, so it's an hour and a half in. My mistake. Let's just see exactly what it is right now. I believe it's an hour and a half into the Asian session. Yeah, so yep, it's around 2.5 actually. So anyways, we're in the Asian session, so we do see increased activity in the overall market. S&P still falling to 3K almost. Wow. So this is gold. We see silver getting a little bit of a bid, but gold's going to be the place to be looking at, in my opinion, for this potential move if the S&P continues to fall here. That's a big move down. Huge. So that break in that support is now, for me, the validation. We're potentially in a risk-off situation. We don't see the VIX move just yet because the market isn't open, but we will see the VIX open quite a bit higher for tomorrow's trading session. NASDAQ will definitely be dropped to some degree. We don't exactly know how far, but we do see on the NASDAQ an ascending trend line that is being held. NASDAQ does and has done extremely well compared to the S&P overall, and a lot of the stocks in the NASDAQ primarily make up the S&P and its move towards the upside. So we do have to take into account, and if the NASDAQ is moving to the downside, you can bet that the S&P is falling even more, with even more aggression to the downside, basically. So we're going to be looking for that. But that was a little bit unexpected. Wow. ARPA. This is Together Pharma. I do not know. I used to trade biotechs for a little bit. I'd trade phase 2 and phase 3 clinical trial data reports. So basically they'd come out, say that they're either going into phase 2 or phase 3 clinical trials where they're going to be testing the efficacy of the drug. And that is going to be the catalyst in which you are either going to be looking to either short or long, depending on obviously the buyers and sellers in the market, the momentum, all that stuff. But it's a good way to really know that there's going to be a lot of activity, a lot of increase in volume, so higher RVOL, which is good for overall trading because it makes patterns more overall well respected, as well as provides a lot more liquidity, which is, as a trader, always a good thing. So there's not a whole lot to talk about here. Main topic, I guess, of the day for sure was the S&P drop that we got right here. And we can see that the Bitcoin markets are coming back down to around 95.67. We'll see if it holds that zone. That's going to be the possible support that I currently see that could hold the price. If it does get to that zone, if it holds above that, that's going to be pretty bullish because the S&P fell pretty aggressively. But overall, the crypto market looks like it is holding not too bad. Let's just switch to the 1 hour time frame. So let's go here. Oops, there we go. So that's going to be that zone that we're going to be looking for. All right, so let's look at some risk on trades. Yeah, wow, that was a big move. I think that's going to be, if this risk off situation continues, I think that GBP USD or GJ, GBP JPY or GBP USD would be pretty decent because GBP has been absolutely getting wrecked generally when compared to a lot of other currencies when you're looking at relative strength. So definitely you're looking to trade something long that has been doing well, which recently right now JPY is doing better than almost anything, even better than USD, so it's pretty crazy. JPY is the thing to long right now. Wow, yeah, big move. It's continuing to fall, man. It's absolutely dumping. Wow. Big move. Gold soaring as well here. Big 1760. Yeah, that's a huge push on gold here. Let's quickly look at gold. Potentially going to be breaking out of that zone. That's what I want to see. And then a retest and we're good to go. Wow, it hit that support real quick. Yeah, it's a lot of transactions taking place as well, so you know a lot of people are getting out. So we do have a support zone at around 31, let's say 30.75 as well, around that zone. If that fails, next key zone is going to be around 29.62. So that's going to be the risk off trade, I think, that you would be looking for in terms of the FX markets. I think crypto is too short to too soon to short just yet. Currencies could be a play as well, but overall, wow, that was a big move. You made good vids. Thank you very much. Durit O'Flag. Not really sure how to say it, but thank you very much. I appreciate that greatly. Just kind of commentating what I see. Yeah, that's a big move. I think let's just take it off. The next zone, if it does break, let's just go to the daily of the S&P and take a picture. Because we can see this zone right here is the main zone that I want to see pass before I go full out. I want to be short. crypto, every equity index, and be long VIX. And why is that? Because not only was this the previous resistance right here, this was the previous 61.8% fib level, which, if you know things about fibs, is a pretty key level within the market. And we can see that in the previous historic time frames, it was a previous level of support before it turned into a strong level of resistance. So right now, what do we see? We see a strong level of support right around here, and we see a high and a lower high, which does look like it's going to hold with how aggressive of a sell-off that we're currently seeing right now. So the highest probable situation that we're going to see is the price to move back down to the support zone and then potentially create some structure where it's going to look like either a descending triangle where you're getting at a horizontal level of support and a series of lower highs. You connect the lower highs with a descending resistance, and then you get your structure. If you're looking to trade short, obviously that has more risk compared to long, but if you're looking to capitalize on this for a possible opportunity, what you'd be looking for is a market structure shift. So right now, a descending triangle is a consolidation structure where you're failing to make a higher high or a lower low. You're actually making lower highs, which is more bearish because the sellers are able to drive the price down each time the buyers are trying to push the price back up. But overall, you're looking for the consolidation to break either to the downside or to the upside. How does that happen? You need to see the market structure break. So this resistance, we can see resistance, resistance, resistance. This is a resistance. Once the market structure breaks and you see the break of that resistance, that's when you know the confidence is broken for the sellers. The stop losses are broken. People are taking profits. People are getting out of their positions because they don't want to lose any more money. And then you get a shift in trend because there's a imbalance in the equilibrium between the buyers and sellers. It's not equal, and when it's not equal, price goes either up or down. Right now we're in somewhat of an equal phase where we're not really making higher highs or lower lows. If there is an unequal balance soon to come, that will be shown by breaking the $3,000 level of support on the S&P 500 index, in my personal belief. That's going to be the main zone if you're looking at swing trades, but I think right now the next zone that we're going to see is back to the support, and then we're going to potentially contract in volatility for a little bit. We'll see how it goes. It could dump pretty aggressively, but that's what I currently see within the daily chart. So then when we do dive into a smaller time frame, that's probably what we're going to see with this pretty aggressive sell-off that we had here. So I could just draw in this zone like here. Not really perfect of that ascending zone though, unfortunately. Fortunately, we don't get a nice ascending trend line in this structure. So we might just have to be working with a high and a lower high with horizontal zones, and just understanding the structure of the market is now making lower highs. Maybe if we get another lower high, we'll be able to put another descending trend line somewhere where it'll be a little bit more respected. But as of right now, there's not a perfect, nice descending trend line that we can work with. But what I will do is take this descending zone out right here and just put a horizontal zone. I'm going to take this out and just clean it up a little bit, knowing what just happened. And now we're at the support zone with a lower high from the previous high. So that's looking pretty good in terms of a potential move to the downside. Yeah, that's a sell-off and a half. More transaction was taking place on that day than any other day since the 16th of June. So lots of activity. Post hours. It's 6:30 p.m. here. So it's going to be 9:30 on Eastern Standard Time. Is that Forex? So this is not Forex. We're looking at the S&P 500. We did look at Forex for a little bit, but this is mainly a global macro update that we provide on every weekday basis. And we go over the S&P, other equity indexes like the Russell 2000, the Vanguard World Equity Index, ticker symbol VT, or things like the VIX volatility index. We measure and analyze volatility because that is going to give indications if we are in a risk on or off sentiment. And currencies generally are a good indicator as well. If you see the US dollar, JPY, Swiss franc do really well, generally we're in a risk off sentiment. You'll most likely see crypto do poorly, stocks do poorly, risk on sentiment things do poorly. Gold probably generally does well in those conditions as well. And then if you see things that are highly speculative in terms of currencies, like, for example, I don't know, the Russian ruble, South African rand, Turkish lira, those types of currencies are more speculative because they move more, and you can actually make money just by holding a trade, by the discrepancy in the interest rates that each central bank provides for their bonds. So you can actually make money holding currencies, but it's only going to be a factor if you are holding on to currencies that have a high interest rate or federal funds rate that you can call in the United States. So right now, just looking at the overall interest rate numbers, we can actually pull it up right now and take a look very quickly. Global interest rates. So this website shows the global interest rates, and we can see overall it's not very high. The United States, 0.25%. Australia, 0.25%. We're just going to cover ones that actually have a decent interest rate. We see Russia, the Russian ruble, at around 4.5%. Turkey, the Turkish lira, at around 8.25%. Not a whole lot more. We got the Indonesian currency. I don't exactly know what that is. We got the Mexican peso. And if you long those currencies, and for example short the United States dollar or the euro, which has a 0% interest rate, you're actually able to make money, not even through appreciation, but just through the ability to have a positive or negative carry cost, depending on if you are longing or shorting those more speculative currencies. So anyways, that's some pretty interesting stuff. I'm just going to continue going off here, closing some tabs out. One thing that I'm pretty interested in is going to be the GDP that's going to be coming out in the United States for Q1. We saw the previous quarter have a negative 5% contraction in the overall economy, and then it does look like the forecast is again negative 5%, which isn't terrible. 2008 we saw more than 7-8% in terms of the contraction in GDP on a quarter after quarter basis. So it's not terrible, but that'll be a pretty interesting thing to be looking at for this upcoming Thursday. You got initial job loss claims at the same time, which is not really hasn't really impacted the market much at all. But man, that sell-off was significant. We got around 19 minutes until the candle closes. We see BTC fall a little bit further. Wow. Yeah, we see a lot of these potential risk-on opportunities here. This doesn't look so bad. The New Zealand dollar compared to the US dollar does look like it's still in that zone of confluence where that previous resistance is going to be a new level of support. But I would not be looking to long at this current situation, because look at the S&P. It's absolutely plummeting, falling very, very aggressive. Let's go back to the 12-hour and the daily. Not terrible if you look at it from the daily or a larger time frame, but if you're just looking at it from a standpoint of how far we fell and the time in which the distance in which we fell, and compare them, it is a pretty quick fall. Yeah, we'll see how it goes. We got a 30.75 range as a support zone. I think if we go below that, we got some distance, so we could potentially get a few shorter trades out of that in terms of the potential risk off sentiment, because there's going to be some worried investors and they're pretty predictable as to know where they're going to go in terms of where to park their capital. And then we'll see how it reacts to this 29.60 range, because that's going to be a major level that I'd like to see hold if we are looking for a bull case. I'd like to see break if we're looking for a bear case. So that's going to be the pivotal area for me. Alright, so I think that's going to be the end of the video. We got some people watching here. I don't really see any more questions coming in, so I really appreciate you watching and putting your comments, engaging. It means a lot. If you thought that this was useful, it'd be great if you would subscribe to our YouTube channel. We do try to provide some good quality education and information and our personal opinion of the markets on a daily basis on every weekday, doing both a live as well as a recorded video that we upload later with timestamps that provide you with quick, easy access on all the different subjects that we talk about within a video that we do put out every single weekday. So, I missed today from Rusty Bap. We do have a recording on YouTube. So if you go on YouTube and go to Performante, you will find our YouTube channel, and we record this every single time we make it, and then we'll post it on our YouTube channel. So don't worry, you can watch them. And if you wait for one that has a thumbnail, which is like the photo that you see on the featured thing, and then I have the other thumbnail which just says market update and it has my setup with computers and stuff. If you look for the one with the thumbnails, those are the ones that have the timestamps that allow you to quickly breeze through the different subjects and different topics that we go over in a video, just to let you know. So for anyone who is enjoying our videos, that's a good way to quickly navigate through each of the topics that we discuss, is going to the description, and then you can find timestamps, and then for each of the little timestamps you can select what you'd like to listen to and watch. So hopefully you enjoyed it. Thank you very much for watching. Pretty big move that we had today. Pretty interesting that we were able to catch it. We see that huge bearish push to the downside, and we're right at that level of support. Probably going to have that 4-hour candle close, although we're only really 45 minutes into this 4-hour candle. So it really just began. In a single 1-hour time frame, we fell that far. So pretty significant. We'll see how this upcoming week goes. If it continues, we do have some good opportunities to potentially capitalize on this next big move. So thank you very much for watching. Until next time, have a good one.